it used to be that Brazil, India, Russia, and China, the so-called BRICs, were the hottest emerging economies on investors' shopping lists. But as those economies slow, investors are buzzing about a different block of economies, the TIMPs: Turkey, Indonesia, Mexico, and the Philippines. Over the past year, these countries' stock markets posted gains that averaged nearly 22%. The exception is Mexico, which is up only 1% on the year. That compares with the BRICs, which are all negative on the year, with the exception of India. So why are the TIMs one of the hottest new ideas on the street? Here to weigh in is Bob Turner, who coined the investing thesis and is Chief Investing Officer of Turner Investments. Bob, thanks so much for coming on the program.
Thanks for having me on, Jennifer.
So why these specific countries, and what makes them economic stars?
They share a few common traits. First of all, demographics are very favorable. And what we mean by that is they have a relatively young population and a lot more workers than retirees. Secondly, they're democracies with elected governments, and they tend to function reasonably well as democracies. And then also, each of these countries have a favorable profile in terms of either natural resources or location. So in the case of Mexico, they're kind of strategically located between the United States and the rest of Latin America, which is doing quite well. Turkey, the central point between Asia and Europe as well. So those are a few common characteristics of the TIMPs.
So what's your time thesis on this? I mean, are we talking about 10 years here?
Well, I think so. I mean, the coin BRICs was developed by O'Neill from Goldman Sachs about 10 or 11 years ago. And we think certainly that over the next 10 years, the TIMPs can do fairly well. You had touched upon your opening commentary about how well they performed relative to the BRICs. So it looks like it's already started.
On Turkey, I mean, how concerned are you about potential political instability there with the protests against the government? How does that factor into your investing thesis? Could that pose a threat to Turkey's economy?
It can. We didn't really envision the type of protest developing that did. The good news is that it is an elected government. The current leader, will be out, I think, in the next year or so. Obviously, he made a bit of a power play to try to take another position, but that doesn't look like it's going to happen because of the protests. So it's something that needs to be monitored, but it does look like it can be controlled as well.
What about Mexico? You kind of touched on this at the top of the interview, but I'm starting to hear that this is kind of the new Brazil of Latin America, if you will. It's the new economic star in Latin America. Could you kind of expound on that?
We do feel that way. I will mention when we came up with this phrase, we wanted some representation in Latin America, and Mexico certainly seemed like the best choice. Again, a fairly young population, a democratically elected government, nice natural resources, mainly energy. You've heard people begin to say Mexico is the new China in terms of manufacturing because they have a low-cost manufacturing base, but with exports to the U.S. particularly, it's not a shipping process, it's driving trucks across the border, basically. So the profile is pretty good overall for Mexico.
Yeah, and in researching for this segment, I was reading that there's talk about amending their constitution to deregulate the oil and gas industries over there. So I guess that would be also a boon for Mexico, right?
Very much so. And you did see that with Brazil over time, like Petrobras, for example, they made it more of a public company. So, that's a sign of progress when these government-owned entities do begin to be more privatized.
Bob, you've laid out a great case for investing in the TIMPs based on fundamentals, but like other markets, emerging markets these days are trading on liquidity infused by central banks, right? Central banks around the world are manipulating interest rates and causing major fluctuations in stock markets and currencies. As the Fed has signaled that it could begin to taper its bond purchases later this year, we've seen a lot of hot money flow out of emerging markets, including the TIMPs. How does all of this factor into your investing thesis for the TIMPs?
Well, I mean, somewhat it's relative performance. I mean, people do invest in emerging markets, so we've highlighted we believe the TIMPs are a good place to look. But you are correct. A lot of it has to do with the flow of funds. I mean, certainly, in the emerging markets, there is always the question of inflation, economic growth. But emerging markets generally are probably overweighted in most global portfolios. It's just been an area that's outperformed for quite some time, up until a couple of years ago. On the other hand, Japan, which year to date's done extraordinarily well, had been underinvested for a long, long time. So I think you're definitely seeing adjustments of the flow of funds, and some of the items you mentioned, like the Fed tapering and interest rates perhaps going up, are having an influence in that regard. But we continue to focus on companies within the TIMPs, and they've had setbacks in price, but we do believe that there are good opportunities within each of these countries.
Right. So, Bob, I mean, how do you go about gaining exposure to the TIMPs? Would you recommend investing in individual companies that trade on U.S. exchanges, or should investors be looking to gain exposure through more of a mutual fund that invests in companies that operate on the ground there?
Yeah, any of those ways. Interestingly, among the TIMPs, they don't have a very developed ADR market. So there aren't many companies out of those countries that you can actually just go and buy the ADR on the US stock exchange. You would actually have to buy the stock directly on their exchange, and that's pretty tricky in terms of registration and such. There are ETFs available for these markets. It's an easy way to get in, but as we've seen, when it drops, it's kind of an easy way for people to short the market as well. In terms of funds available, I would say I don't think there are that many funds that invest specifically in these countries, so probably the ETF is the best way to get exposure.
Bob, certainly an interesting investment thesis. We'll continue to watch the TIMPs going forward. Thanks so much for coming on the program. Come back and see us soon.